Here is how rich people invest their money. Specifically, about 45% of their assets are in stocks and mutual funds, as you can see here. Which makes sense. The top 10% of Americans own about 90% of wealth held in the stock market. But before we talk too much about the rich, I think it's important to understand who these different classes are. So if you're wondering where you fall on this list, right here on the screen, you can find the middle class, which represents probably the majority of individuals watching this video. And right here highlighted in green, you can see the middle of the middle class in the United States, as well as median household income around the United States. When Americans were asked what income they define as rich overall, they said on average you'd need to make about $500,000 a year, or $520,000 salary to be exact, to be considered rich by most Americans in the United States. On the other side, when we look at wealth or net worth, which is assets minus liabilities, here's a breakdown by generation of what each generation defined as wealthy in the United States as defined by net worth, with an overall average of Americans saying you need a net worth of $2.5 million to be considered rich in the United States, in their opinion. So in summary, to be considered rich by most Americans in the United States, you need an annual salary of at least $500,000 a year, or a total net worth of $2.5 million, which makes sense because both of those figures will put you in the top 1% in most states around the United States. Now I say most states because while a $500,000 salary will put you in the top 1% in most states, it does not put you in the top 1% in every state. But it is still a pretty good salary across the United States, as you can see here from Visual Capitalist, where they've mapped the top 1% of households in every state. And on average, you would need to be about $650,000 a year to enter that top 1% in most states in the United States. As always, I'll drop a link to every resource that I'm covering in this video in your video description below. But here's a list of those top 10 states for top 1%, with Connecticut being at number 1, where you'll need a salary of nearly $1 million, or $952,000 to be exact, to enter into that top 1% of households. So now we know what actually makes you rich in the United States, as well as what people consider rich in the United States. And for reminders, that's a salary of $500,000 or a net worth of $2.5 million. Now let's compare that to the reality of most Americans in the United States. When asked, Americans thought to just be financially comfortable, they would need a salary of around $270,000, and that varied significantly by generation. If you're Gen Z or around age 28 this year, they think you need an annual salary of $600,000, and that's just to be financially successful in the United States, not necessarily rich. Smart Asset also did an analysis, which you can see here on the left side of your screen, of how much salary you would need to earn in each state to be financially comfortable, which they defined as a 50-30-20 budget, or 50% for needs, covering 30% for wants, and 20% left over for saving and investing. The reality of Americans around the United States you can find here. So the average salary in the United States is shown here by age. So let's say, for example, if you were 30 years old, your median salary would be $50,000. If you want to be in the top 10% for a 30-year-old, you would need to make $127,000, and $300,000 gross individually would put you in the top 1% for a 30-year-old. You can find your age here. The information highlighted in green tends to be the peak earnings for Americans around the United States by age, with most Americans peaking their salaries between the ages of 35 and 54. On the right from USA Today, they also looked at average salaries for full-time workers around the United States. So because this does represent full-time workers, it is going to be a little bit higher, and you can find your state pictured here. Then The Hill also looked at, most recently, July 2025, what is the average salary around the United States by age range, specifically looking at the Bureau of Labor Statistics' most recent report for Q1 2025. And they also looked at average salary by educational attainment, with high school full-time workers earning around $50,000, whereas advanced degrees workers working full time earned about double that at $101,000. We can then compare that to average household, not accounting for full time or part time or those who are not working, but just household income in the United States, with a median household income of $80,000 and the average household income of $114,000. If you're curious, median tends to be better representation of the general public's experience in the United States, because median represents the middle figure and doesn't account or removes outliers. So for people who make $0 all the way up to billionaires, median is a good example of the typical American's experience. And for household, the median is $80,000 across the United States. So again, for comparison, what do people consider rich in their opinion? At least a household income of $500,000. What do people actually make? They have a median household income of $80,000 and an average household income across the United States of $114,000. Looking at net worth, Americans' opinion is that you need a net worth of $2.5 million to be rich in the United States. The reality is closer to $193,000. So a survey by age looking at net worth in the United States found that on average for all age ranges, the average net worth is around $190,000 in the United States, and most of that is represented through household wealth. That means a lot of middle class, especially, or most individuals in the United States, wealth, their net worth, is represented by the value of their house or the value of their house that they've paid down from their mortgage, unless they are mortgage free. For more context, some of you also asked me for a more detailed age breakdown of net worth by age, which you can find here. And this breakdown does include primary residence, again, that primary home counting towards their net worth, with most Americans, as I've said, holding their net worth in their household primary residence or their property. And that makes sense because when we look at household wealth broken down by family structure, couples with no children tend to have the highest net worth in the United States, with a net worth as shown here in the red line of about $400,000. So now we know how much Americans actually make in the United States, at least by household wealth, as well as a breakdown by age. We also have a pretty good idea of what Americans consider rich in the United States. And by way of reminder, that's a total income or gross income of at least $500,000 and a net worth of $2.5 million. Now, if we were to look at these households that we consider rich, or these households that are rich in the top 1%, if that's what you define as rich or wealth, let's look at how they invest their money. How do rich people invest their money? Well, the good news is that how rich people invest their money is not significantly different than how other individuals invest their money. But I will talk a little bit about how when they secure their wealth, which tends to be, so if you want to be middle class in the United States, you secure your first level of wealth at about roughly $70,000 in most states in the United States. And then as you start to move up this chart, as you see, they start to grow and diversify their income, putting more ultimately as they move up to the top 1%, putting about 45% of their investments in stock and mutual funds. And you see that, especially if they have one primary residence, that their primary residence actually shrinks as a representation of their total wealth. So where do rich people put their money? The simple answer is, as they move up in wealth, it starts with real estate, retirement accounts. Those begin to shrink as wealth grows. They then begin to invest, as you see here in the green, in private businesses, stocks and mutual funds, as well as other assets. And I'll show you how rich people start to diversify their assets as they secure their wealth in the United States. So moving up the chart, the first thing that happens is, as I said, most individuals, as they build their wealth, will secure their primary residence before moving to diversify their portfolio, looking at asset class diversification as well as geographical diversification. Typically for most individuals, that's going to look like multiple properties, whether that's primary residence, secondary, and third, or investing in real estate. A lot of people and a lot of arguments that have happened here is whether your primary home is an expense. I fall on the side of that a primary home is an expense, with most additional homes are actually your home becomes an investment when you are getting paid for that property. So if, for example, you have renters or you are a landlord, that is when a primary residence becomes an investment. Until then, it is an expense and should be reflected on the expense side of your assets as you pay down that mortgage. However, looking at the data, less than about 30% of Americans will ever pay off their mortgage. Instead, they may refinance or do a reverse mortgage, but less than, or put another way, 70% of Americans will go into retirement having never ever paid off their home. And that's fine. It's not to say that a home is not a good long-term investment and tends to be a good hedge against inflation, because home prices, before going insane during the pandemic anyway, used to keep pace in most instances for the last 40 to 50 years with the growth of inflation. So put another way, if you bought a home, it was a great way to ensure that you had an asset that would grow with the value or keep pace with the value of inflation in the United States. So for example, if you bought a home at $250,000 and then you were able to sell that home at $500,000, which is actually not too much of an unheard of story. The median home price in the United States right now is $400,000, for example. So when we look at how rich people invest their money, or where do rich people keep their money, we see that they also start to value the principles of wealth management, looking at an investment advice, tax planning, and estate planning. The good news is that even for the middle class, I think not enough individuals are taking advantage of some of these areas that they can as they move into security of the upper echelon of the middle class, with most granting or having that primary residence, and then looking at tax planning strategies and financial advice. I feel that not enough people are actually taking advantage of this, and you don't have to be in the top 1% to do so. Although obviously, as we look at the numbers, that does help, and it does get easier to take advantage of those diversification strategies as you move up in the income bracket.